Welcome to Trade Gold. On this tutorial, I'm going to teach you how to layer your trades. Layering a trade, also called scaling in, means entering a position using multiple smaller entries instead of one big single entry. Layering trades isn't about making more money, it's about surviving longer, trading calmer, and letting the market work with you instead of against you. For the purpose of this tutorial, we will use this trade alert. Please note, this is an old alert being used for educational purposes only. Do not place this trade. When trading, most beginners put their entire risk on a single entry and hope price immediately moves in their favour. The problem is that markets rarely move perfectly. They pull back, test levels, and shake out weak hands. By committing full risk too early, traders increase emotional pressure and panic on normal pullbacks. Smarter traders spread their risk and let the market earn their full position. If your total planned risk for this trade equates to a 0.1 lot position, instead of entering it all at one price, you can layer it in. In this example, the position is split into 3 entries. 0.02 lots at the first level, the top of the zone, or using market execution upon receiving the signal. 0.03 lots at the second, the middle of the zone, and 0.05 lots at the best price, the bottom of the zone. The total exposure remains the same, but risk is distributed more intelligently, keeping your biggest size at your best entry. This outlines the theory of the process for a solo trader, while our expert traders guide members through managing each trade step by step as price moves. It's always advised to follow the guidance you receive. At the start of the trade, all entries are initially set to TP4 to allow full participation if price moves immediately in our favour. This prevents strong moves from being cut short and ensures we don't limit our upside too early. As additional entries become active, take profits are then adjusted to manage risk and lock in gains, allowing the trade to adapt to what price actually does rather than what we expect it to do. So let's go through the process of layering this trade. We go on to MT4 and tap XAUUSD. Then tap Trade. If you see the initial signal immediately and price is still close to the top of the zone without having moved much, the first entry can be taken using market execution. This allows you to get involved quickly with a small 0.02 lot position without needing perfect precision. The goal of the first entry is simply to gain exposure at the level while keeping risk minimal, not to commit full size too early. Ensure you have market execution selected and make sure your lot size is 0.02. This is based on an account using 0.1 total risk for the purpose of this tutorial. Ensure you calculate the total risk based on your own account size. Once your initial entry is placed, follow what we taught you on our Placing a Trade video and modify your trade to add the stop loss and TP4 figure provided in the signal. Now we need to set a pending order for our second entry. Tap X, AUUSD, and tap Trade. On this screen, we make a couple of changes. First, we tap Market Execution to bring up the Trade Type menu. Once here, we need to select Buy Limit. This option only works if price is currently higher than your planned entry price. Now you need to tap the lot size and change it to 0.03, as this is our slightly larger second entry. Whilst on this screen, you need to input your entry, stop loss, and TP4 figures. Once you have input all the required figures, just tap Place and your pending order will be complete. This will become active if price comes down and reaches your entry price. Repeat this process to place your final entry at the bottom of the zone, ensuring you change the lot size to be your biggest position. Once all trades are placed, your full planned risk for this setup is now in the market, and the work is largely done. At this stage, all entries are initially targeting TP4. If the second entry activates, press and hold on the first entry, select Modify, and change its take profit to TP1. If the third entry activates, press and hold on the second entry, select Modify, and change its take profit to TP1 while leaving the third entry targeting TP4. From there, the final position can either be left to run or closed manually when you're satisfied with the profit. Once entries 1 and 2 have both hit TP1, profit has already been secured and the weakest entries are closed. At this point, we tap and hold the remaining trade, tap Modify, and change the stop-loss value to just above its entry price, removing any remaining downside risk. This leaves the best entry running with no risk attached, allowing the trade to either continue for further gains or be closed manually when you're satisfied with the profit. Let's recap what we've covered in this tutorial. By layering 3 entries, we avoid committing full risk too early and allow price to work into our zone. Protecting equity through structured take profit and stop-loss management ensures losses stay controlled and profits are locked in as the trade develops. From there, we let the market pay us by allowing our best entry to run, giving strong moves the opportunity to deliver outsized returns without increasing risk. This outlines the theory of how the process works, and we always recommend following the live instructions from our expert traders as they guide you through each trade as it progresses. Thank you for watching. We look forward to seeing your results in the Trade Gold Community Telegram channel. Goodbye for now, traders, and we'll see you in the markets.